Hello, my name is Dr. Tanya Wilson, and it is my pleasure on behalf of the Adam Smith Business School at the University of Glasgow to welcome you to this webinar, which is the final session in the Green Finance, Green Futures programme. I'm joined today by three fantastic panellists: Theresa Lober from the Bank of England, Harriet Holsby of the Scottish Government, and Martin Jones from Lion Trust Asset Management. The format for the webinar is that first I'll have a brief discussion with each of our guests to explore their unique perspective on aspects of green finance. Then we'll move on to the main purpose of today's session, which is to answer the audience's questions. You're welcome to submit your questions at any point during this webinar, and you can do that via the Q&A function, which you should be able to access from a button at the bottom of your screen. So just so that you know, we have enabled live transcription for the webinar, so you can also turn that on if you wish. So if I can turn to the panelists, and Theresa, if I could perhaps start with you first. Could you, not everyone here may be aware of the Bank of England and its role, so could you briefly explain to us what is the Bank of England and what does it do?
Good morning, and thank you so much for having me today. So the bank is called the Bank of England, but we're not like other banks. So we're not on the high street. We don't offer bank loans or bank accounts, and we are the UK central bank, despite our name. We're very old, so we're founded in 1694, and our purpose since then has been the same: to promote the good of the people of the UK by maintaining monetary and financial stability. So let me say what that actually means in practice. A lot of what we do relates to money. So we print banknotes in England, and we help you buy things. So if you make any electronic transaction, whether it's buying a chocolate bar or buying a house, all of that gets cleared through the Bank of England. It actually happens on our system that the banks exchange the money. We're also making sure that the economy stays on the right track. So we do that through what's called monetary policy. We want to make sure that the prices of the things you buy increase at a stable and predictable rate. So basically the value of your money doesn't change in an unpredictable or sudden way. And the other responsibility we have is for financial stability. So we want to make sure that the financial system, so the banks, the insurance companies, the pension funds, are safe and sound. So we keep your money secure by making sure that the banks on the high street have enough cash for people to withdraw, that they have enough financial reserves or resources to absorb any losses if the economy worsens. And importantly, if there's a big shock to the system, so for example, COVID, then we want to make sure that the banking system can keep operating and keep supporting businesses and households. And finally, we keep the country's gold reserves. So in our 8 gold vaults, we have 400,000 gold bars around that, which is worth 150 billion, not 1,000, 150 billion.
Right. So you mentioned there that one of the roles of the Bank of England is to protect against unforeseen crises. And a question for you. So climate change and sustainability is potentially something that we can foresee. So is this something that the Bank of England is particularly interested in?
Very much so. So there's a few different ways we think about it, how climate change could affect both financial stability and the economy. And the way we think about it is that if governments, despite everything they've promised, say governments don't take sufficient action and we see climate change happening, worsening, and we end up in a hothouse world with temperatures above 3 degrees, then we will see a lot of physical risks. So we'll see floods, we'll see sea level rises, we'll see wildfires. We're already seeing some of that now, but it'll get a lot worse. And all of that will have an impact both on the economy and the financial system. So if you take the example of a flood, if properties get flooded, that is damage to those houses, or even destroys them. And then the financial system, the banks that have provided the loans and lent the money against those houses, they might not get repaid. But similarly, the people who live in those houses, they will have to spend their money making sure the damage is repaired rather than spending it elsewhere in the economy. So that is one of the ways through which physical risks on the financial side can have an impact. But the other side is, say governments actually do take action, and which hopefully they will, and we'll get to net zero by 2050, and we mitigate the worst of climate change, then that requires the economy to change in quite fundamental ways. So we have to change the way we consume things, we produce things, And that in itself requires big changes. So again, if you imagine you are a bank and you have made a big lending to a fossil fuel company, to an oil company, and now everyone's switching to renewables, then that loan might not be worth very much anymore. So that's a real risk that we need banks to really think about. So we're very focused in ensuring that the financial system is resilient to these risks, but not only that, we wanted to be supportive of the transition so that they can direct finance in a way that helps the transition happen.
Yeah. So thank you very much. It's one of those things that perhaps people don't think of the Bank of England having so many different remits going on at the same time. So if I turn to Harriet now, so you're here with us today from the Scottish Government, but you're not a member of the Scottish Parliament. So can you describe what is the Scottish Government in this context and what is its role?
Absolutely. So one of the key points is that the Scottish Government is not the Scottish Parliament. They're two completely separate things. So the Parliament is elected members of government, like Nicola Sturgeon, for example. But the Scottish Government will provide support to the Parliament, but it will also propose different activities and policies. So obviously the Scottish Government is the Government of Scotland. It's a devolved administration and it has powers for things that the UK government has devolved to Scotland. So those include economy, education, health, justice, rural affairs, housing, environment, equal opportunities, transport, and taxation. So it's got quite a broad remit.
Yeah. So one of the things that you've just mentioned there is obviously the environment. And again, so from that, is it the case that climate change sustainability is something that is high on the priority list of the Scottish Government?
Yeah, definitely. So I think we all know with COP26 going on at the minute, of course, and Scottish Government has really ambitious goals for mitigating climate change and adapting to climate change. So obviously we've all heard of net zero 2045, which is the Scottish Government goal to make Scotland have essentially net zero emissions. That's really important, and Scotland recognises the role that it has as part of the whole world in taking on this challenge and making a big change. At the same time, sustainability is such a vital part of that as well. So if you as a person or as a business, if you can be successful while also reducing emissions and environmental impact, that is the key.
Yeah. Okay, thank you. And over to you now, Martin. I'm going to go and start with the same questions. So can we start, can you tell us a little about Liontrust Asset Management? What is it and what is its purpose?
Yeah, so I'm a portfolio manager at Liontrust Asset Management, and Liontrust is a listed company, so you can find us on the stock exchange. But our job, and we manage around 35 billion of assets on behalf of individuals, pension funds, banks, charities, universities as well. And our job is to be entrusted with that money and then invest that in different assets, different financial assets. So the majority of Liontrust's money is focused on equities, which are shares in businesses. And we also have some assets that are focused, some funds that are focused on fixed income, so making loans to businesses and holding bonds. But the majority is focused on equities, and my team, so it's sort of a multi-team approach called, to use the parlance of boutique asset manager with lots of multi-teams. And my team manage 13 billion of assets focused purely on sustainable investment. So we're looking for the businesses that we invest in to enable the economy to become cleaner, healthier, and safer. And we focus on UK companies, European, and then we also have a global fund which invests across the world. My job specifically is to focus on the European fund and make sure we're finding the very best companies which are enabling a better economy and providing net benefits to society.
So you've talked about the fund that you are in charge of, as well as some of the other funds being focused on sustainability. So from that, obviously, sustainability is important to Liontrust and the work that you do. So and in that, is climate change also something that's on your mind here?
Absolutely. So there's lots of different aspects to look for in our businesses, and we take a very long-term perspective when we invest in our companies. So we're not traders, we're not in and out the shares on a daily basis or on a monthly. We hold our businesses for at least a 5-year perspective, and we hope to hold our business way longer. Some businesses in our portfolio we've held for 20 years. And so with that time frame, obviously, one of the most important things to think about as a shareholder, as an investor, is the risks to that business, is the opportunities and the risks. One of the biggest risks is going to be climate change. So obviously catastrophic for the environment, for humanity, but also for the profits that these businesses will generate. So we want to make sure that all of our businesses are well ahead of that. So we're engaging with all of our companies, and we called it our 1.5 degree challenge, and to make sure that all scope 1, 2 emissions for these businesses are going to be within 1.5 degree targets by 2030. So setting a very strict deadline and making sure our portfolio companies are ahead of the curve.
Yeah. Oh, so thank you to all of you. So we now know a bit more about your organisations, but I'd be interested in finding a little bit more about yourselves. So I'm going to go back over to Theresa, if I can. So can you tell us about what is your role with the Bank of England?
So I lead the team in the Bank of England that deals with climate change. We're called the Climate Hub. And think of it as a bike hub and spoke. So the Climate Hub sits at the centre and leads on the policy response that the bank should take. So we think about, what is the way forward? What is the best way for us to engage with the banks and insurers that we regulate? And what should be, what are the big macroeconomic questions that we need to answer? But we're a hub at the center of this big wheel of spokes. And so we work with all the different parts of the bank who have expertise in different aspects of the bank's work, but combine that with climate expertise. So we're trying to really embed it throughout the organization. So just to give you a couple of examples, our financial stability area does a lot of analysis about how could a shock, if we get really bad physical risks or transmission risks, how could that actually feed through the financial system? Or similarly, the macroeconomic area thinks about, what are the transmission channels? How does climate change actually affect economic variables? What does that mean for monetary policy? But we also think about our physical operations. So what's the carbon footprint of our own buildings and how do we reduce that? And, we print banknotes. How big is the carbon footprint of how we produce the banknotes, but also how we distribute them? So literally across all of our operations that we try to embed climate change and think about how it affects us and how we, contribute to it and how we can reduce that.
Yes, yeah. And at COP26 on Finance Day, the Chancellor of the Exchequer, Rishi Sunak, set out plans for the UK to become the world's first net zero aligned financial centre. So what role do you see that the bank has in achieving this goal?
It's a very good question. So the climate policy, actually setting policy to mitigate climate change, that is for government. But everyone has to play a part in achieving the transition. So that's firms, households, individuals, and the central bank, so the Bank of England. And the way we do that is the carbon footprint of the financial system is actually pretty small because ultimately they sit in a few offices and they use computers, and that is sort of their direct carbon footprint. But where they really matter is through financing of emissions in the real economy. So in the firms that produce goods and services that then the consumers consume or individuals consume. So the financial system has a role to play to support those firms in transitioning and changing how they produce things. So ultimately the entire economy can shift. And so there's a lot of engagement happening between the financial system and the real economy to ultimately bring the real economy, the real firms, to get to net zero. And that's where the financial system plays a really key role. And that's where overall we need to get to net zero. Yes. So the financial system can only achieve it if the real economy achieves it. So we have to work together.
Yeah. And on the international stage, the Bank of England is really leading the way in how central banks across the world think about climate change. Can you tell us about the Bank of England's pledge to advance the climate agenda across its strategic priorities?
Yes, so we have a climate strategy that we've published, which has 5 different elements. And it goes from thinking about how we engage with the firms. So something I've already talked about directly, the banks and insurers that we regulate, how can we make sure they're addressing these challenges? It's also about disclosure. So we want firms to publish a lot more information than they currently publish. If we want to make different decisions, different financial decisions, we need to have the information. So you as a consumer at the moment, it's quite hard to know which company is actually on a path to net zero and which one isn't. And that's true in the financial system as well. So we want there to be a lot more information out there to achieve that. And so we work with government and other regulators to make that happen and make it mandatory for firms to publish that information. We also, as you mentioned, work with international partners, and this is actually a really key part. This is really new. So, we started this work 6 years ago, which is some way before most other central banks, but it's only been 6 years. Some of the other, we've been thinking about the economy for much, much longer. So we've got really good models, we've got really good frameworks. How should we think about it? How do we understand it? And that isn't true for climate. So there's a lot for us to learn. And there's a lot for firms to learn, to develop the tools to really manage these risks, to identify the right opportunities. And so we are part of a network of now 100 central banks and regulators internationally who all work together and exchange that information. And so sharing expertise and knowledge is a really key part. And basically, we try to be as open as we can be and share all of this so others can copy what we've done. And similarly, we talk to others and say, what has worked well for you? And then we just copy it. So we try to speed up the process as much as we can. And the last part that we're trying to do is to lead by example. So it's all well and good to tell the financial system what it should do, but we want to hold ourselves to the same high standards. So for the past 2 years, we've published an annual report that sets out exactly how we manage the risks from climate change. It publishes our strategy, and it creates a benchmark for us that we have to hold ourselves against. So in the following year, we report against the targets we have set ourselves. That's the carbon footprint for our own institution, but also the sort of policy goals that we have set ourselves. And so by doing that, also in a few other areas, we really want to sort of lead the way and show that we're very much part of the solution.
Yeah, yes, thank you. So Harriet, if I can come back to you now, and again, could you tell us a bit about your role within the Scottish Government?
Sure. So I'm an economist, which means I'm part of the Government Economic Service. So the Government Economic Service has around 1,500 economists working in the UK across more than 30 different departments. And one of those departments is the Scottish Government. So there's about 100 economists in the Scottish Government. And my particular job is working on agriculture and climate change. So my job is to provide evidence. So that could be doing my own research to support policy discussions and decisions, and that includes really high-profile decisions by ministers. So day-to-day, my job is really varied and touches on lots of different topics. So I might be doing anything from analysis on greenhouse gas emissions, farm businesses in Scotland, or writing briefs for ministers on a whole variety of different topics.
Right. Oh, so I mean, it sounds very, very interesting in terms of the work that you do actually directly informs the evidence base for policy making. Could you perhaps tell us about, very briefly, about a recent project that you've been involved with?
Yeah, so a big project that I've been working on recently is developing a better understanding of greenhouse gas emissions. So that's particularly how we track them, how we report them, and what that means for Scotland as a whole, but obviously in my case, particularly for agriculture. So if you've ever looked at the greenhouse gas inventory, there's a huge amount of data there. It's really, really useful. It tells us a lot of stuff, but it's because it is so detailed, it can be quite difficult to use. So something that I've been doing is understanding and presenting those greenhouse gas statistics in a way that is more useful to support policy discussion and decisions. This is super important. Obviously, we need to be able to track emissions to ensure that we're making progress towards our goals, but we also need to be in understanding what is going on currently, what's happened in the past, and what that means for how policy directly impacts emissions. So I worked with various different experts, and I was able to break those agricultural emissions down from just sort of saying, this is emissions to agriculture, to saying this is emissions from beef, this is emissions from crops, and so on. And also looking at different sources, so we can say this is methane emissions, this is CO2 emissions, and so on. And that allows a more detailed analysis, for example, thinking about what mitigation measures need to be put in place, or where should we be focusing certain interventions or trying to encourage certain actions that can reduce emissions in various different sectors. So it's been actually really used a lot. So, for example, stakeholder groups who've been doing work looking at how agriculture can reduce emissions within their own sectors have used this as a guide. It's being used by the boards who are currently developing future policy. It's been used by ministers, and I've got to do various sort of fun things with it as well. I've done data visualization. I put together an app where you can explore the data in an interactive way. So it's been a really interesting project.
Yeah, and that sounds like a really important piece of work, because as you say, there's so much information out there, there's so much data out there, and it can be quite difficult to navigate and understand. So actually bringing that data to life and with data visualizations allows, not just people like yourself, but also like the general public and stakeholders to understand more detail, more of the nuances in the data. So at COP26, Scotland's First Minister highlighted the role of private investment in efforts to achieve net zero, such as through Scotland's green investment portfolio. Yeah, and I'd like to ask you, how important do you think that this type of initiative, as well as other type of green initiatives, will be for Scotland, and indeed perhaps for other countries as well, in order to achieve their net zero targets?
Yeah, so it's really important. So obviously, Scottish Government is putting a huge amount of work and effort into reducing emissions, but it also recognises that no government alone can fund the transition. So private investment is absolutely vital to making this change. So the green investment portfolio, just as sort of an example of the amount of value that is being put on this, is a way for investors to identify opportunities in Scotland. And so by next year, that portfolio will include £3 billion worth of projects. And so the Scottish Government is working to lever greater volumes of private investment, but at the same time, you need somewhere for that investment to go, to be useful, to have a good output. So the Scottish Government is also working on making sure that there's enough projects, which is where this portfolio comes into it.
Okay, so thank you very much. So Martin, so you were telling us earlier that you're a portfolio manager for Lion Trust Asset Management. Could you tell us a little bit more? What does that mean?
Yeah, absolutely. It's actually really simple. The language that's always used in finance, they all mean different. Portfolio manager, fund manager, investment manager, they all mean exactly the same thing, and we all use them interchangeably, which is not helpful. So what does that actually mean? So I'm part of a 13 person team, and our job is to research businesses and invest in businesses which are going to prepare our clients for the financial future. So investing and making a very strong return for them, but equally doing one where we're investing in businesses that have a net benefit on society and the environment. And that's what we're trying to do. And all investors have different approaches to it. Everybody has their different investment process. We have a thematic process. So we have 21 themes around, as I said, enabling the economy to be cleaner, healthier, and safer. And each member of my team is responsible for a different theme. So I'm responsible for our providing education theme, our delivering healthier foods theme. We also have themes such as cybersecurity that other team members are responsible for, or focusing on clean energy, these sorts of, or healthcare. These are all themes that we think are going to be important for society and the environment. But equally, the businesses that are enabling those changes and those products and service development, they're going to do very well over the future. And if you're saving with us, you can go on to you can buy shares and you can invest in our fund. We want to help you prepare for your financial future. So we want those companies to be really strong businesses, strong competitive advantages that are going to make a really good return for you as a client. But you can feel good about where your money is being invested. So we try to do that. So my job is meeting businesses. So I meet companies. Just before this call, I was speaking to a business called Oxford Instruments Group, who make lots of microscopy and spectroscopy instruments, which are important for research institutes like Glasgow University. So we're speaking to them literally right before this call. I'll then be speaking to maybe a client this afternoon, speaking to them about the fund, and I'll be explaining new investments, any changes that we've made. And then I'll be speaking to other team members this afternoon about the businesses that they cover, which are maybe in my portfolio. Because my job is a portfolio manager, so I'm looking at businesses myself, but it's also my job to build a portfolio of all the best ideas that my team are producing, and then manage risk as well. So what we don't want is all our eggs in one basket. So what we're trying to make sure is that we have a balance of large and small companies, we have businesses in different sectors, and so that the volatility that you experience as a client, we try to minimize that as much as we can, but we don't want to sort of minimize volatility and then give up a strong return in the long term. So the biggest thing that we think about is always absolute risk. So it's the permanent capital loss. So a business goes bust. Like that is the biggest catastrophic risk. But equally, if we have our whole portfolio in healthcare and healthcare becomes out of vogue in the market, that can also create volatility. So we're trying to just create a nice balanced portfolio of different ideas, different themes behind them.
So many of our audience may also recognise you because you featured in some of the video clips in the Green Finance, Green Futures programme. And I'd like to go and pick up on a couple of points that you made which featured in session 2. And specifically there you explained that one way to think about the role of finance as being to direct capital to the most productive areas of the economy. And then within that, green finance as focusing on investments in sustainability. So I'd like to ask whether you think that these roles are compatible with each other.
Oh, absolutely. Yeah. I mean, I think they're completely compatible. I mean, the role of finance is to direct capital to the most productive areas, but you know, we are there to serve society, and we are there to serve our investors and make sure we're doing a good job for these people. And ultimately, you have to take a long-term perspective in where you're directing that capital. So I think that part of the problem is that you could maybe make well, I don't actually think you could, but say you could theoretically make a good investment in a coal or nuclear plant on a short-term basis. The payback period wouldn't be particularly great, but anyway, say you could make a good return on that in a 3-year perspective. That is not aligned with the horizon of our investors. People who are retiring, you know, 20, 30, 40, 50 years away. This is not, or a university endowment who has a perpetual endowment who are thinking multi-generations, like, you know, it will never end. And so we need to be, I think, as long as the finance industry and the investment industry thinks on the same term as its clients, then I think that those things are completely compatible. Because to make a good long-term return, you have to be acting with society, not against it.
So you talked a couple of times about, like, you know, Lion Trust really there to serve society, but also its individual clients and meeting the needs of those clients. So, so do you think that the importance of green finance and sustainable investment within Lion Trust, has this been growing over time? As are people, you know, is this becoming a larger part of the portfolio of funds that Lion Trust offer? Yeah,
so we previously started out life 20 years ago, and the same people, obviously I wasn't there 20 years ago, I would have been in primary school, but 20 years ago the funds were launched at Aviva Investors, and then as we've moved parents a few times, so we have only ever done sustainable investment. We've refined the process, and hopefully we've got better over the years, but we've only ever focused on these businesses with a net benefit to society and the environment. Lion Trust actually bought us 5 years ago, recognizing the importance of sustainable investment and that there is a big shift happening. And we have since become the largest team at Lion Trust. And so, you know, we account for maybe a third of assets at Lion Trust are all focused on sustainable investment. And a lot of the other investment teams around are thinking, well, there's maybe something in this. Maybe we should be thinking about their approach to integrating these factors into our investment decisions as well. So I think that we're having effect on other people, rubbing off on them, hopefully, and that will hopefully help to shift capital again towards those companies which are, you know, having a much better net impact on society. So it is becoming more important, but we are still at very early stages. So I read an article, an association article just the other day that said that only roughly 3 or 4% of UK assets are invested sustainably. So there's a lot of capital still to shift. It's in the press that, you know, ESG or sustainable investment, ethical finance is growing very quickly. It is from a very low base. But the other thing I'd quite like to say is also, I think I might mention the video, but it's sustainable finance and private investment is not a panacea. We're not going to be able to solve everything. And governments need to act and regulate, and we need to see huge capital shifts. That's not going to be done purely, you know, by fund managers like myself.
Yeah, but I think, I mean, it's absolutely. I mean, I think it's really interesting you say that, like, you know, that there has been this big growth, but it's coming from a very, very small base. I mean, you know, perhaps 20, 30 years ago, and obviously, like, you know, not that many investment companies were thinking about sustainability, and now it's becoming more and more on their minds. And this growth in green finance, do you think that this is more investor-led or business-led? So by which I mean, you know, is green finance growing because it is individual investors themselves that are increasingly wanting to invest in sustainable funds? Or do we think, or perhaps that green finance is growing because as more and more businesses are trying to address sustainability issues through their actions, they now fall into that green finance category, like, you know, or perhaps even a mixture of them both?
Yeah, I mean, it's a really good question. Impossible to give a great answer or a very, you know, I would say that when I started 10 years ago, we would speak to companies and, you know, they didn't want to talk about, you know, how they treat employees, how they, their taxes. They didn't want to talk to us about their environmental impacts or a fine that they'd had recently. And we were always invested also in the best actors as well. And there's still a big gap that you'd be thinking, you know, you'd be a bit shocked. But we've seen I would say, particularly in the last 5 years, there's been a big change in how companies, their priorities. I think you don't want to be the CEO who's running a company which is seen as polluting the environment, treating customers poorly, having fines, having the Bank of England give you a wrap around the wrists. You don't want that. Like, CEOs don't want to be that person. They want to come to COP26 and feel respectable. So I think there's been a big shift in the last 5 years. Has shifted up the agenda. How is that? What has been the chicken or the egg? I don't know. I mean, I think that the sustainable investment industry accounts for a decent chunk of capital. It's still very small, but it is also the only growing part of the asset management industry in the UK. So I think that if you're looking for growth and you want to be, again, the companies want to be, they want to be in the funds which are positive sustainability funds, which people can feel good about. They want to be in our portfolios, and they get offended actually when they're not. So we've had conversations where companies they've not hit our expectations, or they disappoint us and they've come out of our portfolios based on ESG factors, and they get upset about it. They lash out. So they do really care, and I think that they're seeing that this is a growing part of finance, and they'd like to be part of that positive message. And we are getting a lot of individual investors coming to us, but we have also people going to their IFA, their financial advisor, and saying, and now the financial advisor has to ask, do you care about sustainability? Which they are now mandated by the regulator, which I think is great. It depends how they ask the question. You don't care about all that sustainable stuff, do you? You want to, like, oh, this is sometimes the way they ask it, but things are improving. And they're seeing that we're making a really strong return. So the advisors are asking, people are shifting, institutions are thinking about it now. So Pension funds now in the UK, again, the regulator's been really good in saying that their assets have to have an ESG component in them. So all these factors have helped are helping to shift capital, but it's just how quickly can it be done? And are the asset managers who are collecting the capital on the other end of it doing it genuinely and authentically, or are they just using the term, greenwashing? Because there's a flood of money turning into sustainable investment, and yet there seems to be a lot of people popping up, jumping on the bandwagon to make fees on this. So I think we need to be careful with that as well, because there's some cynical actors.
Right. So I'd like to thank all of our panelists for sharing their insights with us today. And one of the things that really struck me from all of you talking from different sectors here is the importance that there's no one sector alone that is going to be able to go and solve this issue. So just picking up on a point that Martin just made, that businesses themselves are very interested in being seen to be sustainable and being part of with sustainable funds, but there is, and we know that that there are incentives for this term greenwashing of making yourself out to go and be more green, and then that's where the role of perhaps a regulator, such as some of the work that Theresa does in ensuring that holding people to account for what they're doing, and also the work of the government sector as well in contributing towards that. So I think that was a very interesting insight from all three of you there. So we're now going to go move on to the Q&A part of the session, and I see that I've received a number of questions already. But just to remind the audience that if you do have a question, you can submit this through the Q&A function at the bottom of the screen. So I'm going to go and take a moment to just go through the questions. And during this time, I'm going to go and ask each of our panelists if they could take a moment just to describe how you got to your current career. So Harriet, let's start with you this time. When you were at school, was this the career that you had in mind? Did you think okay, I want to go and grow up and work for the Scottish Government? Or how did that idea evolve?
No, not at all. So to be honest, I didn't know that you could be an economist as a job. That was quite new to me as an adult. My school didn't offer economics as a subject. I didn't really know what economics was. And I kind of thought of it as very sort of dry and distant, not really affecting things. So originally I actually studied languages at uni, and I had a completely different career. I lived abroad for a few years. And just over time, sort of seeing things around me and seeing things change, and understanding that there was some kind of link to big international changes that was affecting people on a small level day to day, made me begin to wonder about what that was and what was going on. So I got really curious about economics, and I talked to people, I learned about it, and I realized it's not just this really, distant subject that doesn't affect anyone. It's actually, it's our lives every day. It's all around us. So I became really interested. And I went back to uni. I went to Strathclyde and I did applied economics. And I was fortunate enough to get into the GES fast stream. And I was very happy to be placed in the Scottish Government. So it's all been big change, big learning curve, but it's worked out really well for me.
Yeah. Oh. And for you, Theresa, is this something that you had in mind when you were studying in at school, that you wanted to work for a central bank?
Not at all. So I used to think that economics is incredibly boring and it's the last thing I want to study. So it's quite funny hearing Harriet say the same thing. I actually, when I was at school, I wanted to be a diplomat. I wanted to do something international, negotiations, live abroad. And so I went to university and did European studies, which is a mix of European politics, European law, culture, history, and a bit of economics. And that sort of got me into it. And it made me understand how much economics helps you understand how everything kind of fits together, and that you don't really understand politics unless you understand economics, because it's all really interlinked. And so I then added on an economics degree and started the Bank of England. And I actually worked in macroeconomics for over 10 years, mainly on the international side, thinking about, if there's a shock in emerging markets, what does that mean for the UK economy? What happens to interest rates in the US? What does that mean for the UK? But over time, I sort of got to that point where I thought this doesn't feel like it's quite having the impact that I wanted to have, and I really cared about the environment. And so I, for a while, then wanted to switch into working on kind of the macroeconomic side of climate change, I guess. And so it's brilliant that the bank has really stepped up in this field, and there's lots and lots of work to do. And I think that's a bit of a theme with other people I speak to. A lot of people are switching into this. This is because I guess even 10 years ago, there weren't many jobs to do with climate or sustainability, and that's really changing. So there's lots more opportunities now, which is really great to see.
Yeah, and Martin, so I should say here that, like, you know, Martin is one of the University of Glasgow and the Adam Smith Business School's alumni. So, but Martin, with you, when you were studying, you know, were you thinking about going into a career in finance? Was that your goal?
No, I mean, I'd love to tell you it was that planned out. No, I was actually meant to join the RAF, and I was on a scholarship with them as part of the university's air squadron. So that was always my focus. And then in the middle of the 2010, I sort of graduated 2011, and it just everything collapsed then, and the RAF cut their budget. And then I saw a TV program about it was presented by Evan Davies, you know, the presenter from Dragon's Den. Yes. And he did it on what is finance, and I wondered why I'd lost my job at the RAF, and it was all due to finance. And a collapse in the US housing market, and I had ripple effects. So I couldn't believe that. And then he interviewed a fund manager as part of the TV program. It sounded really interesting, taking sort of current affairs, which I was always interested in, and business, which I was studying, and how you could put the two together. And I applied to 26 firms, got 25 rejections, and here we are, 10 years later.
Yeah, so I think that like, you know, all three of you've got, like, you know, quite interesting stories in there of, like, you know, that thing that, like, may have spurred you on when you were younger, just, you know, can lead you into different paths. And also, like, you know, a big point there from Martin of the importance of being resilient. Like, you know, 25 people may say no, but one person, one firm will say yes. But something I'd like to go and pick up, like, each, and questions come through as well. Like, each of you were talking about, like, you know, previous study at university. And is there something, do you need to go to a university in order, for instance, to work at the Bank of England? Or are there other routes to going to university, graduating and applying that will take you to the Bank of England?
So it's really shifting, actually. And I think this is a really great thing. Traditional route in used to be through, you go to university and you used to do economics, but now actually it's, you know, we take graduates from all sorts of disciplines because we've got lots of different areas to work in. But we actually have two programs for people who have just finished A-levels or their higher to come join the bank. There's a program called a level 4 apprenticeship program, which I think is similar to the foundation apprenticeship in Scotland, which is like an 18-month program. And we also have a degree apprenticeship, which runs over 3 years, where people go study 1 day a week and then work for us for 4 days a week. And we've actually recently had someone join the Climate Hub on that degree apprenticeship scheme. And I think it's working out really well, because it's so interesting for them to see what, you know, the real life work actually looks like. And then when they learn about it at university, they can sort of immediately apply that learned knowledge. So I think the two interact really well. And actually, I should flag, if anyone should be interested to apply for next year, the deadline is next Monday. So if you're interested, then you haven't got long left to get your application in.
Yeah, thank you. And Harriet, at the Scottish Government, is it also do they also have a similar sort of, you know, graduate apprenticeship type program, or you've just nodded? So tell us about it.
So similar to Theresa, actually, I think traditionally it has been I mean, there's a huge amount of different roles in government, so it obviously depends on the role that you're going for. But for example, to be an analyst or an economist, it's typically been that you would have a degree and it would at least have a strong economics component. But that is changing now. And there's actually a few different apprenticeship schemes that you can take part on. So some of them are with the Scottish Government, some are with the Economic Service, and some of those are actually degree level apprenticeships. So you can go and you can work for a few years in the government, and once you complete that program, you come out with a degree level qualification.
And so Martin, I'm going to go and ask you a question that's just been submitted now from someone who's really interested in working in finance and green finance, and is asking what type of requirements should they meet. So in terms of previous study, is it important? I know both Theresa and Harriet have studied economics, for instance. So if you're going into finance, do you need to have an economics background, or does other type of backgrounds?
No, I mean, I think, again, to echo, what's been said by Harriet and Theresa, no, we want diversity of thought and background. I mean, it has been a bit dominated by economics and business and maths and these sorts of things, but no, we're trying to build a team, and the best investors are ones that have cognitive diversity, as they call it, people who can see around corners and have a different perspective from you. So we want people with diverse backgrounds as well as diverse academic backgrounds, so that we have a really, every Friday morning when we talk about our companies, what you've researched in the week, people are not thinking all the same. So we really want people with different backgrounds coming to us. I mean, we haven't hired anyone who hasn't had a university degree yet. Never say never, but I would say go to university, find something you're really interested in, and you'll do well at what you're interested in. And there's people at Lion Trust who are working in investment teams that studied nothing to do with finance and only come to that later. So I don't think it should ever discourage you or think I have to study maths, economics, or accounting to work in finance. No.
But obviously, at the same time, if just to address the question from here, having studied those topics that will go and be advantageous to you, I would imagine, in being able to come into the roles.
It probably so I noticed in the question saying studying for exams like the Chartered Financial Analyst. Yes, it will definitely make your life easier getting through the exams. I really wish I'd paid more attention at university. Yes, so if I was, that would make my life a lot easier, because you do have to do exams. Unfortunately, it's an industry filled with exams, and you'll do 5 years worth of exams, and if you've got any basis in accounting or something like that, it will make it slightly easier, but it's still going to be painful, whoever sits it.
Right. So something that can pick up that I mean, all of you have said that that the type of people who are coming into each of your organizations, it's changing every time, the profile of those of individuals coming in. Martin, you talked about, was it cognitive diversity? I think that's an absolutely great term. That ability to look at things from a different point of view. So if you were advising a young person about skills for entering work, so what would you consider perhaps to be, I'm going to really put you on the spot here, perhaps be the most important skill for a young person entering the world of work? Not necessarily finance, not necessarily your organization, but preparing themselves to enter the world of work. And let's go to Martin first.
I would say that the best thing you can do to prepare yourself is get lots of diverse work experience. Meet as many people as you can, try to do as many internships or whatever you can get from as many different places, so that by the time you leave university, you're a rounded person, you've got lots of different experience to draw upon. The people who we interview, and we just started a graduate scheme, started in September, and the people who got through were not necessarily people with always the top academics, but people who've done really interesting and they've been very proactive in getting internships, writing to people, getting 2 weeks here and there, and just building up a very eclectic CV of experience, and it really comes across in interviews and when they join the workforce.
Yeah. And Harriet, I'm going to go and ask you the same question. Given that, you went down a path of languages, and then just became interested in the wider experience. Is there anything that you would consider to be an important skill for young people to have, preparing themselves for entering the job market?
Sure. I was just trying to think what's been sort of the most useful thing for me, and I'm not sure it's necessarily a skill so much as an attitude, maybe. So I have ADHD, which can be cause difficulties in some ways, but it means I'm very open, I'm very interested, and particularly I'm very curious about things. And I think being curious and being interested is such a valuable trait to have. In my day-to-day job, it's great because I do loads of analysis and loads of research, and analysis and research is asking questions and wanting to find the answers. So that's vital. But also just throughout my whole career, throughout my whole life, it's led me to so many different opportunities, things I'd never thought I'd do, skills I never thought I'd learn, never thought I'd be an economist, never thought I'd be working for the Scottish Government. And it's curiosity that has led me to this point. So I think being open to experiences is really key.
Yeah. I'm going to go and have the same question for Theresa, and I'm going to ask you to be very brief, if you could, in your answer.
Actually, I was going to say something very similar. So I think being curious is the key. It's so important. Go ask loads of questions, go delve deeper, try to find out. And I think a really important part of that is, you know, if something doesn't really fit you, that's okay. Feel free to switch. Like your path, you're not going to be doing the same career until the end of time. Like feel free to switch. And I think challenge. So you have to say, oh, this is the job, and so this is what I'm going to do. It doesn't feel quite right, but kind of say, I really like this part of the job and I don't this, and see what can be made of it. You don't just have to accept things as they are. The world can be shaped in so many different ways. And so feel like empowered to shape it to really fit your needs. And I think the key part is, if you're curious and you do that, then not only are you going to succeed, I think it's the best way to actually really enjoy life and enjoy work, which is really important.
Yes, absolutely. So I'm very aware that our time is coming to an end. So all that is left for me on behalf of the Adam Smith Business School is to express my gratitude to each of our panelists for taking the time to discuss their insights with you. And I'd also like to go and thank you, the audience, for the great questions that you submitted and for your attention. I very much hope that you enjoyed this final session of the Green Finance, Green Futures programme, and goodbye.